My first losing day in almost 5 weeks. Okay, now I'm not upset about this losing day because this is going to happen. You can't win every single day, it's just literally impossible. But let me talk about, although I lost today, why I entered into the trade, how I managed my risk so I actually lost less money than I was originally risking. Okay, that's very important. And I'll talk about why I decided not to get into another trade. So let's get right into the charts here. All right, so here's the first thing. If we look at the 1 hour, we can see here it was this day that, let me back test to, it was Tuesday here. All right, so as you can see, we are in some ranging markets, okay? We are consolidating like a motherfucker, as you can see here. Clean price action, my opinion, is when we have a clean trend, right? So we can clearly see that this is a downtrend, and then we start to get into some consolidation. Now, we don't know if price is going to consolidate and break to the upside and start pushing into an uptrend, or if it's going to consolidate and continue in its downtrend. Now, based off how I trade, what I like to see when I'm trying to determine the trend, I decided that we are in bearish market conditions and that price is more likely to push down into an uptrend. And if we're looking at structure, where price pushed up, higher low, higher high, higher low, higher high, break a structure, pushed up, confirmation, lower high, price is pushing down. I was really just looking for a lower high retest of the moving averages for price to create another lower high, push down, break out the consolidation, and continue to the downside. Now, one thing that I should have kept in mind was that we're right at 5,000. This is a very important, strong psychological number where a lot of fuckery can happen. Okay, so that's one thing I should have paid more attention to. But I like structure on the higher time frame. I was bearish. I wasn't thinking bullish whatsoever, and now it's just a matter of going to the lower time frame and looking for an entry in the same direction. So going to the 5 minute, let's take a look here. Let's mark off our London high that we have right here. We have London low right here. Turn these kill zones off. Okay, so New York session is now open. Now, what I saw was this. And let me go back one actually. Okay. So we were in an uptrend on the lower time frame, creating higher highs, higher lows, higher highs, higher lows. Swept this high, price pushed down, and we broke structure. Okay, so I liked the way that looked on the lower time frame because again, I'm just looking for bear structure in the same direction of my higher time frame buys. So once I saw this, I pulled out my Fibonacci. Okay, but more importantly, before I actually pull that out, we can see here that we also have a fair value gap here. Okay, mark it off right here. And I also have this fair value gap indicator as well too. So, but we had a fair value gap here, and we had a fair value gap here as well. Okay. Now I pull out my Fibonacci. Let's draw it out like this. And I was looking to take a short in the golden zone in my Fibonacci that lined up with the fair value gap. Okay. Now originally I had a not that big of a stop loss, but here we go. 100 tick stop loss, well above this swing high. Okay, closer to the moving averages, closer to the VWAP. We're aiming for that $5,000, 5,000 psychological level. Okay, a little bit further because we wanted that at least a 1 to 1. Okay, that was gonna be my first target. Now here's the thing. As price, and this is what I was happy about as I was managing my risks. Okay, price tapped me in, and as price is pushing up, full head of steam, breaking through fair value gaps, turning them into IVGs, IFVGs. I wasn't gonna just sit here and watch price just absolutely demolish my full stop loss. So if I'm just getting full momentum in the complete opposite direction, I wasn't even in, I was barely in profit for like a second. I'm just gonna close the trade out. Okay, I saved myself half an R because I cut it at roughly around 50 ticks. I think it was even closer to like 48. I completely saved myself an additional 50 ticks, right? And my 100 tick stop loss is up here. Would have gotten hit either way. Okay, so if you could find ways to manage your trade, okay, and I will say this is a super safe stop loss, super safe stop loss. But if I'm seeing price full head of steam heading straight towards my top stop loss, no hesitation, I'll much rather just cut it, save myself some of my R, save myself some of my risk, and then if my idea is still correct, wait for a better entry, get back in, and then I can potentially take 2 trades, only risking 1R worth of risk. Okay, which 1R for me is typically my daily loss limit, right? I don't like to exceed 1R, negative 1R on the day. Okay, so was able to manage my risk very, very well on that trade and get out at negative half 1R. Okay, 0.5R. And then price ends up pushing up. Okay, we end up sweeping that London liquidity, and then we started to drop down. Okay, definitely could have taken another entry here, decided against it, mainly due to the fact that after I took that loss, I zoomed out, I looked at the 1 hour as price is creating more and more structure, and I just decided that this consolidation is just ugly. This isn't what I would consider optimal market conditions where I would like to trade. I typically like to trade in the trending market. So I decided, okay, we have FOMC the next day. We got all these news events dropping on Wednesday. Let me just wait for the news events to drop. I was still confident that price was going to be bearish, but let price break out of the consolidation, start trending in that downwards direction, and I can look for good setups Thursday and Friday. And as you can see, we finally break out of the consolidation the next day. Okay, I believe we had PPI drop, right? Let me go back. March. Yeah, so we had PPI drop, and when PPI dropped, we finally broke out of this consolidation. Okay, so again, I took the first trade. I managed it very, very well. I cut my risk in half pretty much because once I saw price full head of steam heading towards my stop loss, I'm not gonna just sit there and watch it hit my full stop loss if it's just going full head of steam. Secondly, I rationally zoomed out, went to a higher time frame, look at the current market conditions, realize that we are consolidating like a motherfucker. Let me just wait until price breaks out of the consolidation, okay? I'm in no rush. Most people, including old Christian, would have just kept trying to force it, trying to win. Like, no, I know it's gonna do this. I know it's gonna do this. Fuck what you know, okay? Wait until you get clean market conditions, which in most people's cases is when price is ranging in one direction, either up or down, right? But when it's moving sideways, just wait. Just wait for price to break out of the consolidation either direction and then get in for your trade. That is a smart way to do it. So hopefully this video was super, super helpful. Again, we're not going to win all the time. You don't need to win all the time. Just make sure that when you do lose, it's how you react to the loss that's going to determine if you're going to be profitable long term. That's really all trading is. How you react when you lose. Obviously, you need to have a strategy, but how you react when you lose is ultimately going to determine if you have long-term success in this game. And when I lost, not only did I cut my trade short, not emotionally, okay, but based off of what I was seeing in the current market, which was that price was just full head of steam heading towards my stop loss. So let me save myself some R. Super important. And then 2, I wasn't so quick to just jump back into a trade because I was trying to make my money back. I zoomed out to the higher time frame. I took a step back, realized the market conditions we were currently in, and made a smart, unbiased, unemotional decision, which was to just sit out and wait for price to give me more favorable market conditions. And that is how it's done.